Experts are warning of a major economic crash in 2025. It's already begun, with the S&P 500 dropping over 11% in just a week. This isn't just a fleeting dip, it's a signal for what could be a turbulent financial year ahead. But don't worry, I'm here to show you exactly how to protect your money and even come out richer than before. It all started on a seemingly ordinary day. April 2nd, 2025, President Trump stepped up to the podium. He declared what he called Liberation Day, a move intended to bolster national pride and economic independence. Yet little did the world know that this announcement would send shockwaves through the global economy. He levied a 10% tariff on all imports. With even higher rates on countries with significant trade deficits, this decision was meant to protect domestic industries. But instead, it rattled global markets with swift repercussions. By April 8th, just 6 days after the announcement, the S&P 500 had plunged from 56.33 to 49.83, wiping out a staggering 11.5% of its value. Investors around the world were in panic mode, and for good reason. Economic indicators were flashing red. The New York Fed placed a 27% probability on a recession occurring, while the Atlanta Fed's GDP Now model predicted a 2.8% decline in GDP for Q1 2025. This wasn't just a blip on the radar, it was the beginning of something much bigger and potentially more destructive. The market turmoil we're witnessing today echoes the past. It's reminiscent of the 2008 financial crisis and the dot-com bubble, where overvalued tech stocks led to massive losses. 5 moves to protect and grow wealth. So what can you do to protect yourself and take advantage of this situation? Let's explore 5 strategic moves to safeguard your wealth and potentially grow it. Move 1. Cash out smart. In times of economic uncertainty, it's critical to reassess your portfolio. Identify which assets might be overvalued or at risk of a sharp decline. Take the tech sector as an example. Some companies are trading at valuations 60 times their earnings, reminiscent of the dot-com bubble. When that burst, investors who had heavily invested in overvalued tech stocks saw their portfolios decimated. To avoid a similar fate today, consider selling these overvalued assets. Reallocate your funds to more stable investments, such as blue-chip companies or dividend-paying stocks. These offer more resilience against market fluctuations and provide steady income streams. Move 2. Safe havens. When the market is volatile, it's wise to have a portion of your portfolio in assets that tend to hold their value or even appreciate during downturns. Gold is a classic example. As of April 7, 2025, gold is trading around $3,000 per ounce and has been a reliable store of value for centuries. During times of inflation or economic instability, gold often performs well. Another option is U.S. Treasury bonds. With the 10-year yield currently at 4.15%, they offer a relatively safe return. And if you're comfortable with digital assets, consider stablecoins, which are pegged to fiat currencies. They offer stability in the unpredictable crypto market. Move 3. Bargain hunting. Every market crash presents opportunities to acquire quality assets at discounted prices. One sector to keep an eye on is U.S. manufacturing, with tariffs encouraging reshoring and domestic production. This sector is projected to grow by 4.2% in revenue in 2025. Might be particularly promising. Consider adding them to your portfolio when prices are low. This strategy not only hedges against current market volatility, but positions you for potential growth as these industries expand. Move 4. Side hustle buffer. In uncertain economic times, having multiple streams of income can be a lifesaver. If you haven't already started a side hustle, now is the time. There are countless opportunities, whether it's freelancing your skills on platforms like Upwork or Fiverr, selling handmade goods on eBay or Etsy, or even offering consulting services in your area of expertise. A side income not only provides a financial cushion, but also peace of mind, knowing you have additional resources to fall back on in case of job instability. Move 5. Reinvest timing. Knowing when to get back into the market is just as important as knowing when to step out. After a crash, markets typically recover, and those who buy at the bottom can see substantial gains. One effective strategy is dollar cost averaging, where you invest a fixed amount regularly, regardless of market conditions. This method allows you to purchase more shares when prices are low and fewer when they're high. It's a disciplined approach that mitigates the risk of trying to time the market perfectly. Additionally, watch for market indicators such as reduced volatility or improving economic data to time your re-entry outro. In conclusion, while the 2025 crash may seem daunting, it also presents a unique opportunity. By implementing these 5 strategic moves, you can protect your money and position yourself to profit when the market rebounds. These strategies have helped me navigate past downturns, and I'm confident they can do the same for you. So don't delay, start preparing today. If you found value in this video, please give it a thumbs up, share it with your friends, and subscribe to the channel for more insights on how to navigate these turbulent financial waters. Together, we can turn challenges into opportunities and ensure a prosperous future.